All right, how we doing? Good morning, folks. So once in a while, when I have the time, and I literally have maybe 15 to 25 minutes this morning, we'll just jump in during the session and see what's going on. So let me modify my screen share. So I can take you through multiple things on the same screen. Okay, stop screen. Stop screen. Yeah, this one. Good. So, we did some live analysis yesterday in SetUps. We looked at NQs. We looked at We looked at NQs and we looked at, I believe it was EURUSD. We'll see if we can get to gold today. So basically, I'm trying some stuff out, and I was trying to see if I could set up an overnight short at the start of Asia and then Q. So basically, this is my entry. That's my stop loss. So Asia basically took me through drawdown. I'm still sat in a little bit of drawdown. Again, I haven't traded Asia in almost 15 years, but I'm just testing out. This is my test account. I'm just testing out some stuff to see if I can come up with some setups for those of you, including myself, very often who are time poor. Time poor meaning we don't have time to be sat at the charts during these periods. London Open, New York Open. So it's basically say, okay, if I think there's a short tomorrow, basically this is the setup here. So now, before I started studying volume analysis profile, I used to call these lines the handle points, or listen, or the control points. I had no clue back then, this was 10, 12 years ago, or thereabouts. I had no clue that there was a phrase like that in volume analysis or volume profile analysis. So I can't call them that any longer because, at least I can't call them control points because that would be confusing to some of you. So I'm just going to call them handle points. It's basically the low that is violated when a change of character happens. That's what it is. It's the low that's violated when a change of character happens. Let me repeat. It's the low that is violated when a change of character or subsequent market structure shifts happen. And I showed you yesterday that every single time, if you have the right that higher time frame bias direction, every single time price goes through that low or through that high, it could be a high if you're going upwards bullishly. And I'll give you an example of this in a previous. So let's see. If you came up here, so this here was a change of character to the upside. On Nasdaq futures, see that there. Okay, so price comes through this, right, and shifts structure to the upside. What happens when it comes back down? Again, if you're in the key phrase here is if you're in the right higher time frame direction. And so basically all you need to do, you could literally just take in an entry here, put your stop loss here, or here. I think this was a fair value gap. Let's just show that real quick. I think this was a fair value gap here. Or should I say an in? Well, so there. Or should I say an inverse fair value gap is what I'm trying to say. Somewhere. Well, that's okay. So that, yeah, it was respected. literally stabbed to the pit. And then I am back. Okay, yes, I'm back. Let's get the screen back up. Let's get the screen back up. Right, so it's a very simple strategy, like I said. So I mean, in hindsight, I don't realize, I'm wondering why I didn't just think of just setting a limit order here. Actually, that would have been a better way to do it. But I just basically took a market entry here, and my stop loss, well, technically should be above this fair value gap here. I'll just move that out of the way so you can see it. And that's my stop loss. So I want this. Yes. So you see this here. There's a fair value gap. One second, let's blow this up a little bit. Sorry guys, I'm still getting used to trading view. Okay, aha, that's what I'm trying to do. Excellent. So this should have been the entry. Basically, that line itself. So I'm just going to call them the handle point, but I can't call it the control point anymore. This is from my personal vintage over the years. So if we are due for a short, I expect to see a consolidation. Remember yesterday, consolidation and then movement. So it gets there during Asia. Perfect. You'd expect a consolidation and then a drop. So the early entry was simply because, like I said, trading views messing with my head at the moment, but I'm going to miss back. It didn't occur to me that I could literally just have placed a limit order. So note to self next time, just place a limit order there, and then find a liquidity profile. So that's there. I'm using one. Well, technically, I'm cheaping on my stop loss. My stop loss should technically be here. So let's just put it there. I adjusted it. So that's where my stop loss should be. And this is something you can do overnight in Asia. So it's a setup, and I'm testing it. This is the first time I'm taking it live overnight. Usually I wait till the morning, but I just thought, okay, if you are the kind of person who doesn't have time to go through Asia overnight, go wake up in the morning, so we can do that. Let's see if it works. And as we can see, we've seen what we would expect to happen in that Asia range. Okay, so let me show you this on another chart. Now, I do have a pending entry or limit entry on the sell limit on the mini futures that I set for basically the middle of this fair value gap. So in essence, if that trade had been too drawn down, this was, and I actually set this yesterday afternoon before our analysis. So, I mean, I guess I would have liked it to get here and drop, but we'll see. I might just amend this. And so since I'm in front of my charts live, if I stay here long enough, we'll see what I would potentially be looking for. So it's basically the same setup. I'm showing you how you could take it two different ways. One is live in front of your charts. The other way is set the entry overnight in case you think you won't have time in the morning. And so on a 5-minute chart, let's put in the kill zones. I think I'm going to take out the volume just so the chart's not too busy. Right, so in London, we've taken out Asia's high. So if we're going short, that will be a nice little signal for it. I would then be looking for a 5-minute change of character. So we've taken out the high of Asia, great. If this low goes, so if this low goes, something like this is what I would be looking for. That's assuming we're short. Something like this. And then a drop. Now the question is, where would I be targeting? That's a good question. The other way to do is, like I've taught you again, if you don't have time, right? If you don't have time, is just wait for the first bullish engulfing. Wait for the first bullish engulfing of the day in the direction you think is the right bias direction. So basically that would be this candle being engulfed, right? So if you're doing this from the perspective of I haven't got time to sit in front of my charts, now how would we do this? Because we want to set a limit order, but we want to first make sure the price, so you basically have to wait an hour, wait for price to take out the low of that hourly candle, and then set a limit order somewhere in the range of the candle. Or if you can't be bothered, just say, okay, fine. Once the candle closes, just enter straight there and assume that's the high of the day and stick your stop loss there. I'm not going to lie, that fair value gap there, just a little bit concerning for me. I feel a lot better if we tapped it already, which is why I have this limit here. But we'll see. Of course, there's a world in which we're going bullish on NQ today. That's a very feasible world. And if that's the case, what would we be looking for? Well, let's go to 15-minute chart. We have this high to aim for. In which case, let's see now. But you know what? Even if we're going bullish, again, I'm not Deutsche Bank or JP Morgan, but I really, 1 second. testing that stop. So I put that order in yesterday when we weren't sure what's going to happen. So let's tighten that stop a bit. There we go. So, even if we're pushing up, again, I'm not a market maker, but Mr. Market Maker, if you're listening to me, don't you think that at least this level here, at least this level here, actually let's make it array. So there is a massive fair value gap from here all the way down to there, right? I think, methinks, what do I know? Methinks that would be a good place from which to reload for a long. And then if that happens, depending on what we see at that point, we could then look to target either this high from yesterday. Let's put that in there. First of all, yesterday's London high is a double. Look at this here. So that's a nice double. Interestingly, that's where the stop loss of this is. Kieran, talking about what you said yesterday, but I don't see there being enough liquidity. I mean, there is another fair value gap here. So we could, well, that's the one I'm talking about. Yeah, that is the one I'm talking about. So I think that even if, and of course, the other potential bullish target would be here, which is the high of yesterday. But I am of the opinion, not so silly me, that if we're trying to get here, if I'm a market maker and I'm trying to get here, I think the most effective means is to tap into here, or maybe further, maybe much further, right? But at least here. At least here. And then we can look to go somewhere in this area here. So one way or the other, I think we can almost safely expect to see this level claimed at some point today. It's not guaranteed, but that's what I like to see. And like I said, I mean, if we're getting there, if we're going to get there, I think at that point, by the time we take out this candle here, which is where I initially adjusted this to, so by the time we take out this fair value gap there, the top of that candle, I think that's a point in which I'm ready to give up on that trade. I'm not interested in losing an extra $1,000 just holding on to the last 5% of potential. All right. I haven't checked the news. Okay, let's do volume quickly. So this is just naked price action. Now let's see what volume has to say. Okay. So yesterday's point of control is all the way. Okay, so basically, look at that. So this is yesterday's point of control. So maybe to be on the safe side, maybe we adjust this trade to the point of control. Give up an extra $500, right? Okay. That's the first refinement. And this is yesterday's volume area high. That's yesterday's volume area low. So, and that volume area low actually lines up very nicely with basically the area you would expect. In essence, this was a reload yesterday, closing this fair value gap. So this fair value gap from here to here was reloaded with yesterday. We haven't reloaded this one. The price will still come all the way back down there. That's not impossible. Let's look at the previous day. Okay, so the previous day's volume area low is kind of where we are now, right? Or where we were early this morning. And the previous day's point of control was, okay, so that was my entry. Yes, because, yes, I remember. So yesterday, I put in this entry at Wednesday's point of control. So I'm hoping now, actually now that I'm in another trade, that's invalidated, but we'll see. So let's go back here. The trade I am in overnight. So I'm looking for the MetaTrader controls. I'm looking for the MT4 controls, or the controls where they would be on the MT4 platform. So same thing, same thinking. Same thinking. I think what we said was, so basically I left it overnight this week because I thought if there's going to be some crazy stuff to happen, this is basically filling in a gap. Right, that gap can stay unfilled for a very long time. So let's refine it now. Let's refine it now. This way. And suddenly, this overnight trade doesn't look so appealing anymore when you refine it that way. Not in the slightest. It's basically a one-to-one scalp. Okay. I'm certainly not a fan of that. I'll tell you that for free. SD. This is why I said I don't like trading at night. I told you I was struggling to see anything in my charts. So yeah, that doesn't make any sense to even take in that entry. Yes, but you don't need to wait for it to enter this fair value gap, which it still might. I'm tempted to just, well, I'm in the trade already, but if I was a few minutes and now say $100 in deficit, I would just close it and wait for what I think the reload will be. But anyway, so that's that. Let's look at the EU. Alright, so I've already done some analysis in EU this morning before I went live. Following up from what we did yesterday. So let's take off. Clear zones to make the chart look cleaner. Let's take that off as well. Alright, so yesterday, again, handle point, drop. There we go. Again, we're seeing a consolidation. So, just using that one setup, just that one setup, We've got quite a few potential 100 points. I really wish I could call them control points, but that would just cause confusion. There's one there. Actually, that's not straight. That is straight. Okay, there's another one here. And if you're counting, although I don't know that I have much respect for this one because it's already gone, but hey, here we are. So we know our bias in EU long term is bullish or is bearish. Yesterday was a Fibonacci extension move, and I believe it has hit the 161. Let's just remind ourselves real quick. Oh, sorry. Fibonacci. Wrong direction. Wrong direction. I will get the hand of trade review. Okay. All right. So 61 retracement. Okay, so it hasn't actually hit the 161 quite yet. So we still under one. Okay. Okay. That, if I'm not mistaken, is a daily order block or fair value gap. We did all this yesterday. Let's go take a look. Yes. So that is a fair value gap on the daily. So, all right. So that candle, that's the fair value. Actually, technically, no. Fair value gap is actually higher. There it is. And we've already tapped it. Okay. We've already tapped it. We're going to refine it here because, and two, the original fair value gap has already been partially mitigated. So this is a pool that hasn't been tapped into yet once price pushed past it. So we'll go back to the 1 hour chart. So several things that could happen. Price could literally just come back in or just head straight for that fair value gap. In which case okay, let's put kill zones on. I don't know what this is doing. All right, so drop down to 15 and 5 minute. All right, so that was Asia. Yesterday, New York yesterday was a consolidation. Asia broke into it. Asia broke it. Let's take this way off. So, which is very rare that New York. Well, New York PM was a consolidation actually. PM was a consolidation, so that's not rare at all. So draw that out. Asia tapped it, and we've had a change of character since. This is 15 minutes, by the way. Okay, so there's a nice daily low here. There's nice daily low there. Just beneath that is, what is that red line? I believe that's another daily low, isn't it? Okay, yeah, so that's this. Okay, so that's another daily low. No, that's not where we are in price. We are here in price. So what is that red line? Okay, so yes, it is. It is another, okay. It is another, no, I think it's just, that's just there on the charts. It's just standing there. Okay. Right, so daily low from yesterday, fair value gap on the daily chart just beneath. I think we have some news. Okay, no, that's not anytime soon. That's not today. Okay, that's fine. So, what are we looking at? We got a daily, we have a 1 hour engulfing already. Okay. Okay, so this is still not clear enough for me. Still not clear enough for me because we've basically gone both sides of this consolidation. So New York PM was a contraction, a consolidation session. We've worked both sides of it. We've come up, we've come down, and so we wait. Overall, we're still, okay, so that's zero, that's fine. And this is, okay, that's fine. That's fine, so, yeah. How high, let's see, high bad news, 10 a.m. Okay. So we believe we want to go down. The question is, are we going to go up first? And I think, check if this is a low. Lord help me with trading. My brain is just screaming for MT4. Okay, so I don't think we've got to worry too much about this one. We potentially have here, here, and here. Okay, let's put volume on that. Volume. Still loading. Why is that? Okay, so where are we? We are currently sitting at yesterday's point, I believe point control, yeah. Okay. We took out Asia, we took out New York. Is that been okay? There has been. Okay, so if you're scalping, there's already been a nice little scalp. If you're intra-session scalping, it's been a nice little scalp on the 5 minute already. So we've taken out New York's low here. And then we had a change of character here. To the upside. So a nice little scalp here. Taking out New York PM's low. Right, dip back into this fair value gap. This is for the scalp. Actually, it's not even a fair value gap at all. It's not a fair value gap at all. No, I would call that a fair value gap. Not at all. So it's not fair value gap. Period. Let's not fudge it. We don't fudge concepts just to fit a trade that we think we like. Now that here is an inverse fair value gap that I'm trying to draw out if my trading view will cooperate. So it's a tiny one, but it's there. Right, it's there. That's an inverse fair value gap. Price blows through it and comes back. If it doesn't hold it, that's fine. But anyway, so there's no fair value gaps, but it's still respected. So take out the low, establish a high here. Come back into this and take out this high. Okay, so this point is your retracement. That I wouldn't take in it because I don't see, I like to wait for fair value gaps for setups like this. But this would have been your entry. Once price clears this candle on the way up. If you're brave, that's your low, and you target the already established high of London. That's 3.4. I don't think we're going to get there, is the honest truth. So perhaps a more prudent target would be here, this fair value gap here. Or maybe even this one that was filled from here to here. So that would have been 2.57, and you would be literally getting out right about now. So there's one trade opportunity for a scalp. In terms of the long-term play for the day, it's not clear yet. I have some intuition, but we don't trade by intuition. It's not clear yet what price wants to do. And so we don't make it fit what you think it should be. I'm going to take that screenshot for Telegram. All right, let's go back to NQ. So it's basically one-to-one. I would have closed when it came back to my I would have closed when it came back to my zero to wait for a setup for this one, but it is what it is. So let's see. Any intercession scalps already here? Okay, so let's take out the volume for now. London's taken out Asia. Yeah, I looked at this already. Yes, I'd be looking for this to go or for this to go. I mean, technically, no, we haven't taken out Asia's low yet here, but we have taken out these lows. So you could argue that this is already a change of character, and that this was a reload for a long. Again, it's not clear. So, all right, let's look at gold. I know Joshua is currently in gold, both literally and figuratively. And I've done more than the 25 minutes I planned. I'll say this for trading view, it's very immersive. It's actually a very nice environment. It sucks you in, it makes you want to stay. Okay, so that scalp, like I said, has, if you were targeting the London high, actually, no, I can see why you would target the London high, because it's a double high. Look at that. It's a clean double high. And we know that double highs and double lows are basically waiting to be rated. See, it's a double high with the high that formed in between Asia's open and London's open. So yes, actually, that is a very, very, very. So yeah, that would have been a good trade to be in. Like we said, that would have been your entry. Actually, no, the entry would have been here. There. Right? Stop loss beneath that, or if you want, you can pull your stop loss all the way back there. But then that becomes a far less appealing. Well, that's still 2-1. It's not bad. But if you can stomach losing slightly more often, there you go. And then that's almost 4-1. Not sure that I would have taken it. Good morning, SD. Well, yes, I'm just showing a setup for scalp on EURUSD that has already started playing out. So that's that. All right, so let's look at gold. Let us look at gold. Okay, so I have no clue what gold's been doing, so I have to start from the higher time frame. So just bear with me. For those of you who have very clear ideas on gold, I'm doing this because Joshua asked me to. So I'm going to have to start all the way up at a weekly. But I haven't traded gold in weeks. Okay. Ooh, so, alright, so let's do. Okay. Wow. If you simply got in gold in May and held to now. Oh boy. Oh boy. All right. So, and I believe we're in uncharted territory, if I'm not mistaken. So let's go from one chart. Yeah, gold never been here. Right? Gold has never been here. So we are at levels that we've never seen before. Okay, so that's fine. So in one way, that makes it easier to analyze, if a little bit more tricky. So this is uncharted territory, so that's fine. So look at the weekly. Okay. So we formed, let's see, we formed the weekly high, and that high was tapped. Can you see it was tapped? And see, taps, even on a weekly chart, that could be about 100 pips. But even if it's like 1 or 2 pips, that's still significant. That high was tapped, price shut down, and then took out that week's low. Okay. So that would suggest a bearish protocol. Also, we've been having fair value gap after fair. So this has been a very good. So there to there is a fair value gap. There to there's another one. Okay, here to here, not so much. But definitely here to here is a fair value gap. Okay. So you take out the high of a week, and then the very next week take out the low. That would suggest that something is going on. And then this here closed this fair value gap. So let's make this red. Again, this is what I would do at the start of the week to understand an asset before trading it that week. So if you've already done this, just be patient with those of us that haven't. We don't just jump in, start calling highs and lows willy-nilly. No, that is a high. That's a high, so it's green. Yeah, that's correct. Okay, so I will then drop the daily chart. Okay, so I can see it more clearly now. So we pushed, so this was a week, we pushed up this week, and then the next week let's refine the level. So that day, so okay, we went up, we came down, and again we broke. So this is a daily swing low. This is a swing low on a daily chart that we've broken. All right, so now let me say this. Contrary to what some people teach and what at some point I did believe until I decided to do my own studies, price is not, there is no central algorithm that sets the market price in any asset class. However, most of the larger entities that trade, market makers, institutional funds, central banks, and all these things, they trade using algorithms. So there's no master algorithm that sets the price, but the people whose actions contribute to the price being set, right, are trading using algorithms, and they have to train their algorithms with rules. By default, an algorithm cannot trade if you don't give it a set of rules. And one of the set of rules that they follow is when you see highs and lows of weeks, days, and months swept, and sessions. I told you, months, weeks, days, and sessions. In essence, you see that in one day or one session or one or two, weeks or months, the high, so here the high of the day is taken, the very next day the low of the day is taken, and we also see that this is the swing low. From this point downwards, I'm just going to draw this here, you could literally, right, have taken a trade as a position trader with your stop loss there and look for the next swing low on the daily chart. That's there, right? You would have made 1.2%. Literally, that was not guaranteed, but very probable. And so we've done that now. We've swept the next swing low on a daily chart. So this would be a good time to start to potentially think about a reversal, wouldn't it? Get rid of that. Okay. So do we have a sign of a reversal? Kind of, yes. Although this wick is a little bit concerning, but it would seem to be yesterday. Okay. And we haven't yet visited this point here. So let's drop to a 4-hour chart. Hallelujah. Also, just to point out that this is setting up very nicely for gold to eventually get back here at some point. The question is when, but this is a double 4-hour top. It's going to be graded. Even if gold wants to go south for the next 2 years. All right, so Devante says, that's why my swings are towards the, well, yeah, okay, fair enough. So we're seeing the same thing. That's good. Like I said, at some point, this is candy from a baby. However, the next nearest candy from a baby is here. Is here because, as you can see, these two highs, I'll just move it down, take the lower high, so you see these two highs here are in such close proximity, and that's my handle point. SD, I was saying before you came that before I learned about volume analysis, volume profile analysis, what I showed you guys yesterday, the low or the high that sponsors the change of character, and then the subsequent market structure shifts, or breaks of structure. That was me hitting my head. I used to call it the control point, but I can't do that anymore because of the confusion it would give. So I'm just going to call it the handle point. So I would not be surprised for gold to get back up there. And also, yes, we see the signs. That low was swept on the 4-hour chart. And then there was a change of character here. Here. So there's a change of character there. And then there's been a retracement. So yes, I think, methinks that we're looking at least this. So that is 4154. So yes, SD, like you said, Yeah, I think 400 is not a bad target. Also, it lines up. 1 second. Yeah, without all the block just there. Okay, so yeah, that's not a bad target. So the question is, how do you get there? I actually would like to see it get here. I think there's a very good chance that it could outperform 4100 and get to 4157 or even all the way up to 4185. Now, of course, we now have to execute that trade in a means that makes sense for us without risk to reward and other things. So this is how I would be looking at it. Okay, so it's ready to trade. Okay, trade idea is okay. Right, so okay. This is very interesting. So this is the 4-hour trading structure. We don't really need that. It's about the 4-hour chart. Okay. So that was swept. Bullish engulfed. So this, like I said, this is the point at which I am ready to go live. Right? 4-hour sweep. And then engulfing, it hasn't engulfed yet. So yes, this, after this, so you wait for retracement, yeah, you come back. So I'm gonna draw out this order block. Well, not an order block, but this fair, not even fair value gap. Just gonna draw this zone here. This candle here. This is where I would have expected. Okay. Now let's hop back into 15-minute. Alright, so we came back here. So at this point here, you could literally, I'm just going to get rid of this. You could literally put an entry there. You put your stop loss here. You would have had 521. If you refine it a bit further, the entry will be that low there. That's what's sponsoring this reaction. And then that would then be almost 821. Okay, but if you didn't get that, so that was yesterday. If you didn't get that, how do you get aboard today? Well, let's put the kill zones in. Okay. Well, if this is going to reload to the upside, again, we're dealing with the higher time frame bias of bullish here. If that's going to reload to the upside, So this was the handle point. What do I mean by handle point? The high in this case, the spot, so change of character, this took out this low here, right? And then change character to the upside to the market structure shift. And we see that handle point has been touched multiple times. Okay, so that one has been mitigated because the price has come back to it once and twice. It's done its job. So you can get rid, I mean, it doesn't mean it would, like, I'll just leave it there because it might still be respected in the future, but it's already been respected. Now, is there another one? So let's get rid of this. There is another, okay, so this is a low here, but it's not the low of the session. Okay, so here. Okay, so in Asia, we swept New York PM, and there has already been a shift to the upside. The change of character, I mean, there's a less obvious one, but I like to use obvious ones because most traders will be looking at obvious things when they're making their decisions, and I'm making my decisions on theirs. Either the manipulation of retail traders or the ones doing the manipulating. Okay, so there, actually not there, sorry, here. So that there sponsored the sweep of that low and price, and there we are right now. We're actually there as we speak. Okay, so let's drop down to a 5-minute chart and see if we can find an entry. Okay, so Asia trended, it didn't range. Okay, all right. I mean, I'm not adverse to this. I don't know that I'll do it, but it's not a bad idea. And since this is a test account, I might just take this now, like right now, live, and see what happens. Of course, this low could be swept. So, but this is an idea right here, right now. Literally just target that high. That's 3%. Let's take it. Okay, 101. Let's just see. Should we? I would wait for the 15-minute candle to close. You know, let's do it. Let's try it out. Okay. Full margin on gold. What do you mean? SD, I don't understand. What do you mean? Let me know. What do you mean by that? What do you mean by that? Again, like I said, the ideal entry was yesterday, here, down here. But let's just take a point. Let's see how it goes. It's a paper trade. We'll come back and analyze it. So this was, the ideal entry was yesterday, as we've analyzed already. And if you were there yesterday, you Would have been dropping it large, but okay, let's see. Okay, and that is pretty much how you would to go all account. I see what you. Full. Oh yeah. Oh, full margin. Oh yeah, yeah. I get you. I get you. Like just basically empty the clip, right? Yes, that will not be happening. Certainly will not be happening. And even with the uncertainty at this level here, a safer way to do this would have been put this stop loss. I know that looks huge, right? Put that stop loss there. So basically, yesterday's low. Oh yeah, we're out of sync with the longer. Depends on what you class as a longer time frame. But remember, we are talking about getting to so 4102. All right, let's go back and fine tune that. No, no, not you. You. All right, I'm going to put that. Okay. So you see that with our intended target in mind, that all of a sudden is not such a bad trade, is it now? That is, and I think I'm going to take that one as well, but it won't even, I don't think it will let me take it. I don't think I have the, let's see, to keep it within my risk profile of 1%. Yeah, I'm a 1%er, and I'm not ashamed about it. Right, so let's see. So, let me talk about this. 6.75 quantity. Esty, help me out. I'm trying to figure out how to size my entry here. That one? But then, actually, no, because it'll just make me modify it. It won't show it as two different trades, will it? Okay, let's see. Is there another goal I can use for this? So let's use FXCM. Right? Let's use FXCM. And let's put that up. Position. And set. Actually, I didn't even go ahead and set it there. Can't be. Set it there. Let's set it there. So amount 919. That what I put in there? 919. How do I size on for 1% on what you call it now? trading view using this. So it's telling me, is that 1,000? I don't understand. What's that? What position do I put in? Let me see. I put 0.1, minimum of 1. What did I put? Is that 101? Okay. Okay. All right. Okay. So let's start with 1. Buy. Okay. Stop loss here. Okay. I think I can certainly go up from 1. Okay, fine. So 10. Okay. Tap the trade panel. Okay. Okay. Thank you. Sorry, I'm an MT4 dinosaur. Okay, there we go. There we go. Okay, so where's the risk? Where is the risk here? Market. So 10 is roughly 400. Okay. So I think I can go another 10. Okay. Okay. I can. So I'm going to buy. So I'm basically just taking the same trade, one as a scalp, and the other one as a more long-term play. Okay, and so my take profit will be 400. No, I don't want to. No, I don't want to add another 10. Okay, so this is the order, right? Okay, so no. What do I do? What do I do? Okay, so wait, I think I know how to do this one. If I go there, yeah, if I click on protect position, okay, I can then put the take profit. There we go. Aha. Cool. So let's see how that does. So again, we're just showing basically ways in which you can, if you don't have time to manage a scalp and you think you have, so let's see. So this is 221. Okay, that's 221. Okay, that's smaller than I thought. Sorry, my son's calling for his mother. Hold on. All right, so I think that's it. Let's see how it turns out. Okay, that's 400. Here. And the daily, how did we get that level on the daily again? Yes, I remember now. So, yep. And I said I would even like to see this, to be honest. That would be really nice. Let's just pop it up to there and see how we go. Yeah. So that's a nice place for stop loss. Literally just beneath that low. There we go. There we go. All right, folks. We'll have a great day in the Z markets.